Hey everybody, it's Dr. K coming at you from London, and we're just at the top of the new year here, and we know that the markets have had two of their strongest days, especially for this time of year. The December 31st, the markets were up about 2% or higher, which I believe was the most powerful percentage gain in many, many years. Of course, that was due to the agreement, and the market realized at that point we're not going to go over the fiscal cliff, and we rocked forward. Then on the first, we continued higher. The last couple of days we've been digesting these sharp gains in the major averages. Also point out that in yesterday's Fed meeting minutes, there was a growing dissent that QE infinity should continue, and a number of members were voting to slow it down, phase it out completely sometime this year. And thus, precious metals got hit very hard. If you look at GLD or SLV, which are ETFs that track the price of gold and silver, you'll see that they sold off on greater than normal volume. And the question then is to be begged: are these precious metals going to have trouble going forward? Well, it's a question really of perception. QE3 is alive and well, not just from the Fed, but also from the Bank of England and also the ECB over in Europe. So I think that will serve to prop markets higher, but as talk continues about phasing QE3 out, I think that will certainly create some negative ripples in the marketplace. So it's a matter of, again, just watching the data in real time, seeing what the market tells you, and if this uptrend is going to continue, we'll see it. We'll see it not just with the major averages, but hopefully also with leading stocks. I'd remind everyone, however, that in 2009 we had QE1, which rocketed all the averages forward, but it was a junk off the bottom led rally. So if you were looking for clues among leading stocks, that may have prevented you from getting on board the big rally. So we're going to, obviously, the market direction model is in tune with all these things, and we'll look on a real-time basis to see how well this current buy signal is going to fare. Naturally, if we start to see some sort of breakdown that is more than just a pullback, the model will then at some point switch over to cash or even to a sell signal. Gil?
Yeah, I think, here's kind of the way I look at it. A lot of people were betting on no fiscal cliff agreement, and I think it's what this...
Let's turn your mic up.
Yeah, here I am. How's that? Everybody hear me fine?
Perfect.
I think the one thing you have to watch out for here is whether the move on Wednesday was a big short covering smash to the upside, because while there were some stocks that broke out, a lot of them have sort of fizzled out. There's Ellie Mae, for example, was one of them. Some of these retailers like Lululemon trying to break out and reverse. And I think some of the better stocks have been like 3D Systems and Poly One, but that's a very tiny stock. Whereas you've seen some of these other ones like this morning, I think VRX, Valiant Pharmaceuticals, which is looking like it wanted to break out the other day. It comes right back in. But you see a lot of this sort of stuff here. Let me try to make this a little bit bigger. This sort of things were pulling back, and then you get this jerk, very much like the market, this jerk to the upside, and then they're coming in. What it looks like so far is like it's a nice index rally, and it may turn out that, like Dr. K is saying, with a lot of junk off the bottom stuff driving it, then it's going to be an index rally, and you may be better off trying to play it with ETFs, index ETFs, rather than stocks. That may be a dicier proposition, because if you piled in, on Wednesday and you're buying this stock, I think this is a viable gap up in the morning, and it just reversed and flipped out. And I was just showing you VRX, it comes right back in. So if you're buying that on Wednesday morning, now you're underwater and you're not in a lot of trouble. But it was sort of a jerk to the upside, and it struck me as sort of a big short covering rally, because I think a lot of people really did expect an agreement that was either not going to be there, or it was going to be somewhat watered down so that the market would just consider it to be a bunch of baloney. But I do think they cut a lot of people short. In fact, Dr. K and I yesterday did a podcast with Michael Covell, who's the author of The Trade. What is that? Dr. K, he's done several books.
Trend following.
Trend
Author of
Following
Trend Following?
Manifesto, The Little Book of Trading, or something like that. He's written a number of books, and he just reviewed our book, and part of that was doing this interview yesterday. But he was talking about a friend of his who had gone heavy short the market going into Tuesday, thinking that there was going to be no fiscal cliff and the market was going to gap down. Now, I think if there hadn't been a deal, you probably would have seen a gap down. But I'm curious as to why the market seems to act so, allegedly so powerful, and I don't really see that in terms of all these Bible breakouts I want to pile into right now. And in fact, my approach in this market has been to go hunting on the short side, because I tend to think that this is going to turn out, at least on a stock-by-stock basis, potentially a short-selling opportunity into this rally. And, of course, we keep talking about Apple, and that remains one of my favorite short sale targets on any rally. And, of course, we got stopped out at the 10-day moving average on Monday of this week, which, I'll just react to that quickly. And if it runs higher, I can test it out. But usually I'll just use the high of the day as a quick stop out. So, by the end of the day on Monday, if I was testing out a little position, which I was again on the short side, putting it out up here as it gets to resistance right up at this peak right around 534, 535, then you just stop out. The next day you gap up, but you're right into the 50-day moving average, so I'll test it again. And I've been short the stock over the last 3 days, and I'm making more money with that so far than anything on the upside. Although I should point out that some people laughed at my Krispy Kreme donuts chart last week, but look at that stock. We looked at this last week sitting in a base, and it was looking pretty good on Friday, and the last 3 days have seen, actually the last 4 days have seen the stock push higher, and today we're gapping up. Now, Dr. K, is that a viable gap up?
Well, technically speaking, yeah, it would be.
So you could buy it here using the 1050 low, I guess, roughly. What is that low? 1045 as a stop if you wanted to.
I mean, the earnings are accelerating nicely, and so it is playable. And the earnings line going through the weekly, I mean, it does look pretty impressive. The Krispy Kreme did recover, started its recovery back in mid-2010, and the earnings continue to be quite robust. And the overall chart, this is
here's
the
a
second
weekly
gap up, actually.
Yeah, here's a weekly, and you see a big like double bottom thing with a handle here, or a base, 5-week base, and you break out here. So I don't know, maybe donuts are going to be the theme for new and sustained leadership in a glorious new bull market, led by the economic policies of the current administration and a clueless Congress that consists of both clueless Republicans and clueless Democrats. Before I get somebody's ire raised there by being too political, but the bottom line is you get a deal that has no spending cuts and tax increases on the alleged wealthy, and a lot of these are smaller business owners, and also on capital, because they're raising capital gains taxes by, I believe, a third. Is that right, Dr. K, from 15 to 20%?
Actually, no, I have to check that to see exactly what it is. But
that's what happens. So I don't understand how any of this is good for the economy and for the markets. Today you saw the jobs number come out, and I guess more 175,000 versus 150 or something like that. I don't know. To me, it's all just a manufactured number, and the alleged unemployment rate went up from 7.7% to 7.8%. And I noticed during the morning you're seeing gold and silver getting pounded. And then once the jobs number came out, I think it was perceived the higher unemployment rate by 0.1% was seen as bringing on potential QE, whatever, more QE from the Fed, because they did say that they would peg it to unemployment and GDP growth. So you saw a bid come in on the silver and gold, and they have undercut, and they're trying to hold this prior low here on the gold, which is right around 1640 or so.
I was
we'll see what happens.
Yeah, it's a 33% increase in the capital gains.
Yeah, so a third higher, and
that's
so
20%. Yeah.
So to me, I don't know. I don't understand what would be the basis for a rally other than QE. But the Fed yesterday said that they're going to tone it down in 2013, and that they're not so sure that it's all that effective. And I think the reactions we've seen from the market, both on September 13th and more recently, when the market sold off after they announced mortgage bond purchases or additional ones and treasury purchases this last time around. I think the market's telling you that doesn't really see a big QE push here, and I think the metals have probably been the underlying clue, and you see now that this is why they were coming off, is that the market probably sees less potential for QE either to be effective or even to just be implemented by the Fed going forward. There may be more political pressure because now you have the debt ceiling coming into play as a topic of debate among the two-headed beast known as our current government, each head being one the Democrats, the other one the Republicans, so now they can fight over this debt ceiling, and the absurdity of that also will become apparent to everybody, it seems, but the participants. So it was interesting to hear Howard Dean yesterday saying that we need to raise the debt limit in order to maintain the full faith and credit of the United States government, which, when you think about it, for these times, it's not an unusual statement to hear, but it is quite an absurd statement when you think about it, because the idea is that we're already in debt up to our ears. In other words, for you lay people like ourselves, if you have a credit card and you're maxed out, and you just tell your credit card company that, look, the situation will get a lot better if you just raise my credit limit. And that's basically what they're saying. So there is some absurdity to all that. I'm not sure when and where all that comes to an end, but I would be, we just be attuned to what the market's doing. So, we came into the new year in cash, and I'm happy to say we're annualizing right now at about 400% a year based on the last 2 days of couple of percent we've been able to make, mostly on the short side. And
it doesn't work that way in the real world in terms of being able to extrapolate all the way out. But yeah, it's been a good first
I know, but I thought I'd just do that as a joke. We could be hype artists here, trying to hype that performance up. But whatever. I just find that it's been easier so far in this year to make progress on the short side rather than the long side. But there are some things out there that have been doing okay. I think Dr. K has been dead on with 3D Systems, and he actually indicated to me that we should have bought it right about here off the 20-day moving average. At that point, it wasn't looking to me like he wanted to buy that thing. But you know what? That's really the nature of the stock. And from there turned around, it has gone higher, in fact, about 20% higher, more than that, since then. But it's a pretty rocky road, so it's a tough one to hold in the midst of all the volatility of the stock as well as the market. So just had to do a quick trade there. I'm watching Apple here. So if it makes a turn, I'm getting support right on top of here on the 10-day moving average, so I'll cover part of my position on a 529 stop. So if we're looking at, let's take a look, just a little bit of a, you can see what I'm looking at right here. So I'm starting to get a cross here, so I'm just going to back off and wait and see what happens. Go back down to my core position and maybe gas it up again later if it rolls through. But we'll see what happens. But that's one way, that's how we handle these shorts, and you can see this has actually worked reasonably well today from the signal. For those of you familiar with this very simple 620 chart. Another stock I thought that was shortable today is Coors, getting above the 50-day. It skids right past, so if you're looking at this chart, you can see, let's go to Coors in here. You can see where you get a sell signal up around 53, and you're blowing it. You're blowing chunks now. I actually have been shorting it all around in here because this whole pattern to me looks suspect straight up. And with other retailers, like for example Lulu, high-end retailer breaking down. Coach, which I'm also short this morning from the blip. Whoops, that's not Coach. Also short this morning from this blip higher. I thought this move was pretty weak on Wednesday when the market's rocketing. And if you look at this on a long-term basis, you can see this sort of big head and shoulders. And we've seen a few stocks fall out of bed, in this position. So I think right here I'm going to try and short a little bit of it. And my approach is not really to be bearish or bullish necessarily, but just to kind of watch and see what's happening on a stock-by-stock basis. I also think Krispy Kreme was great on the long side, and would not be biased towards buying that one. I didn't, but I should have, because that's a pretty nice move of about a little over 10% in a couple of days. So, and there was a nice breakout right there, bingo, coming out of this pattern. So they're out there, and but to me, the short side attracts me more. And also on Wednesday, I shorted Cirrus Logic. It's a sort of an Apple cousin stock, and if you look at this, you're kind of running in. Here's a big head, and you got a left shoulder. So it looked to me like you're getting up into a right shoulder here. I didn't know at the time on Wednesday whether it would go further to the 200-day or the 40-week moving average, which you can see is up around 31.68. So I wasn't really sure where we were going with that one, but I go ahead and put it out, and I wasn't stopped out on the high of the day, and it's continued lower. So now we're here at this point, keeping an eye on it intraday. And you're still well below any trailing stop, at least the way I would work this position. So just trying to give you some idea on how I'll handle something like this. You can see Coach just barely coming in. I actually was hitting it in here, and it's starting to roll over a little bit. But it's not really clear to me if this is really going to break just yet, so we'll see what happens. But I think it is a short sale idea, and I think I'd put that on your list. So I've got Coach I'm looking at. I've got Alexion also, I think. It's broken out, but just kind of keep an eye on this one here and see how this pans out. It could roll over. It was looking good in here as well. Didn't have as much volume, so better volume, but this is a thinner stock, and it'll tend to get these jacks to the upside. So I'm just keeping an eye on this. If it were to roll over and break down hard through the 200-day moving average, that might be a reason to start to look at shorting it once it's under the 200-day, using the 200-day as a stop. So Michael Kors, same thing. I think this is just kind of floater rally. You have a lot of volume here on Wednesday, but it doesn't really get anywhere, and it stalls out. And I thought that was a weak thing. So when I see it come up again here, I'm going to hit it on the short side, just above the 50-day. A lot of times they can go skidding just past, because it is sort of a breakout failure so far. That's the only thing I can call it right now. And it's not like I'm going to try and say this is a constructive base until I see further evidence that it is. To me, it's a failed breakout, and on these rallies, I'm looking at shorting it. So I think also Intuitive Surgical on this massive breakdown, you got a weak rally. Coming up into here now, maybe this is where it stops, so I can come and test the position here and use maybe today's high or yesterday's high or Wednesday's high as a reasonably quick stop on that. Remember, a $500 stock is like a $50 stock, and if it goes to $512, it's like a $50 stock on the 5120. So I look at it in those terms. Don't get too carried away with the point moves, because while Apple might look really ugly today on the break of 13 points, the bottom line is that Cirrus Logic on a percentage basis is down 4%, whereas Apple's down about 2.5%. So remember, it's all about the percentages, and so far I would say this is a weaker situation, but it's kind of a dual play on these. I don't think Coors looks anything like LinkedIn. Someone's actually saying that, because if you look at LinkedIn, you're forming a cup with a handle here. So you're coming up the side, you're trying to hold in here, but that remains to be seen. I will say that I've been studying the sponsorship numbers on LinkedIn. I've noticed that Fidelity, Contrafund, even Jeff Vinnick in the last quarter, which was reported December 12th, did increase their holdings. And Fidelity, Contrafund over the last 3 quarters has been a steady buyer of the stock, which I think is very interesting. That's extending all the way back to June, the quarter of June to September and October, or September to December in the quarter. So it's basically 3 quarters out is what I'm trying to say. And they've been accumulating the stock. Now, I don't know what that means, but I think that's constructive for the stock. So here you have on a weekly chart a cup with a handle, and Dr. K and I were noticing that it seems like the stock is tightening up a little more relative to the rest of its formation. It may take more time. It may do something after earnings. I don't know, but I'm kind of keeping an eye on this. But it got hit the other day on Wednesday. There was a downgrade, and it was kind of feeble. But just looking at that, now let's look at Coors. I don't really see the similarity here, unless you think this is a big cup and handle. To me, this looks like a base under a base, which I don't know whether that's going to be a new short sale pattern or not. But I don't really see it setting up constructively, necessarily. Like I said, this is a failed breakout right here. You had a base it was forming right here. It failed. Now it doesn't seem to be able to get much past the 10-week and the 50-day moving average, and so to me that's weak. And I'll look at shorting it here unless you can stop me out, say around, what's the high here? 54 probably. So, and it's coming in, and I've been shorting it all up and through here today, and it's coming in. So all I know is the proof is in the pudding in terms of what it's doing once you put the short out. So LinkedIn, on the other hand, is not looking so hot either. But I would not say that they look the same. And so I'm going to cover a couple of other shorts we had talked about earlier. And, of course, on this one, you had to be stopped out on Wednesday on the gap up opening around 6:30 at the very least. And that's just a stop up. Remember, 620 stock going to 630 is like a $62 stock going to 63. So that's about a 1.5% move. That's really nothing in the grand scheme of things. So you take your loss and you get the hell out of there. I was looking at Alexion again, and that did the same thing if you had done it. But for our money on Monday, we decided to just move to cash. We weren't interested in playing fiscal cliff roulette, which I think is what you had to be doing to be making any big money on Wednesday. And for anybody who did that and made the correct bet, I congratulate you and recommend that you visit a place called Las Vegas as well. But that's pretty much how we looked at it, and we just stayed in cash. So I'd look at what happens here on this rally and where are the strong stocks, where are the weak stocks. The weaker ones I'll look to short. It's been stocks like Apple, I think stocks like Coors, stocks like Cirrus Logic, and stocks like Coach, for example. So Alexion has been a little stronger, and that's a pretty decent move, but it's not a pocket pivot type move. If I see a pocket pivot move, I will generally just stay away from the thing until I see something more deleterious, something weaker happening. And in this case, I would need to see a break of the 200-day moving average. But I'm not averse to testing a little bit out in here, and if it just pushes through the highs at 100, I'm just out of there. So maybe even sooner if I'm not really making any progress. So, and you can see the market's holding up. But yeah, to me it looks more like an index rally. Hey, Dr. K, what are your favorite long ideas? What do you think are the best long stocks out there right now?
Well, you've got, hold on a second here. Yeah, I was just looking at, actually, before getting the obvious ones like CBLT, but there's this RKUS. I was looking at that again. It's an IPO, not to buy here, but it's curious because of the nature of it.
I'm sorry, what was the symbol on that?
RKUS.
Oh yeah, we were looking at that one a few weeks ago. Somebody mentioned it. It's a real thin stock though, but it's acting pretty well.
Right. With these IPOs, they start out thin, but if you get institutional sponsorship starting to pile on, the volume will accelerate very quickly. So, and it's a $1.6 billion stock, so it's really, yeah, it is on kind of the borderline between being a little bit too thin to trade. But again, if all it takes is a nice 50% move, and then all of a sudden it's a $2.5 billion company.
Yeah, it doesn't. It actually doesn't. No, it should make it through my screens. It doesn't, though. I wonder why. Let me take a look at something here. Because it does average 785,000 shares a day. Now, that's odd. I'm not sure why this doesn't make it through. I haven't seen it on my screens recently. 47 cents they're looking for in 2012. That was last year. So 17 cents this year and negative 64. And maybe because it's not a forward or a positive estimate, rather. Anyways.
Yeah. Well, then there's also there's a few others here. There's RAX, RAX, RAX Hosting.
RAX is continuing to do well. Yeah, pocket pivot here, another breakout, and holding up. So that's doing pretty well.
And then RYL was another one. It's in that home building group.
Oh, Ryland Group, RYL.
Yeah.
Yeah, and it's holding up. You can see the gap up on Wednesday, and then just kind of hanging out there. So no, not like there's some massive upside move occurring after Wednesday. So again, pointing out why we didn't think that you have to be in a huge rush to get long this market. And go ahead, Dr. K. What else?
There's also DDS, which is Dillard's, and REGN. REGN is the biotech company.
Yeah,
And
Dillard's. Is that correct? Wait a minute. Are you right? Is that what you're talking about?
DDS is Dillard's. Yeah, it's
Okay,
back to
that looks pretty poopy.
Well, it's not the best stock out there, but I like how it's consolidating at the 50-day, and it might get some traction.
But wait a minute. So you like this gap down move off the peak?
Oh wait, you're looking at a different stock, aren't you?
DDS?
Wait, and I'm looking at a totally different stock. Hold on a second. That's bizarre. Hold on. My Wanda shows DDS, and it doesn't show that any sort of gap down there.
You're right. Neither does mine. It shows it. It shows it. That's weird. That's an E-signal
really
quirk.
funny.
Wow, that's pretty.
Yeah,
Well,
I
okay.
would
So
rely
let's
on
take away
Wanda.
the gap. But this doesn't bother you. This reversal on Wednesday, where it started up and then just kind of pooped out and rolled over.
It bothers me a little bit. It bothers me enough that I wouldn't buy it here because it could certainly presage going through the 50-day at this level. But if it gets traction at the 50-day and bounces, maybe we'll get a pocket pivot in there, and that could be bought.
But you don't see any of these as a violation of the. Well, you know what? On the Wanda chart, it's above.
Well, again, on the Wanda, it's not doing that.
Okay. This is messed up. I'm not sure what these guys did here, but.
You signal, higher error rate certainly than Wanda.
Yeah, that's just one of the. I've even seen things where they double the volume on the day on accident, or you get a reverse volume bar. I've seen like a volume bar to the downside, like it's negative volume. So they get some quirky stuff. Anyways, okay. So we sell. What else were you talking? You're talking about Poly One and Cracker. That's the one. That's what I think of when I hear that one. Poly One and Cracker. Get it? Poly One. Get it? Oh, all right.
But that had a nice viable gap up. Just a
nice, and it's still going. So it's actual, but it's a thin stock, and I think that's probably why we've seen. They're not going to show today's action, but the Russell 2000 is your leading index. It's breaking out, but that seems odd. Why do you think small caps are leading?
Well, that's an indication that the market's willing to take more risk, and I think that's probably because of the situation with the fiscal cliff behind us, and that allows the small caps to take a nice step forward. And also the overall technical pattern on the Russell is quite excellent.
Right.
If you look at the weekly on this, it looks great, and it certainly has been outperforming the other indices recently. And despite the issue of QE being taken off the table in 2013. Right now, it's on the table. It's on the table in all the major debtor nations. So I think the QE effect will push markets higher in the meantime. And so people are now more willing to take risk with the smaller caps.
Right.
For all those reasons.
Let's see. Another one you'd mentioned was Regeneron. That's on my list as well. You had a nice bounce off the 50-day. Not any volume though. This was this enough for a pocket pivot? But isn't that kind of a V-shaped pocket pivot, Dr. K? What do you think?
That I would say that's okay. That's all right. I mean, basically, it does 3 days of trundling along the 50-day moving average, and then it has a pocket pivot.
Yeah.
So I think that's fine.
Yeah. So maybe that's viable in here. But it's just kind of setting up. So if you had a nice pullback in here, maybe you would step into it. And you can see on the weekly chart down at the bottom here was a nice bounce right off the 10-week line, and it looks pretty coherent on the weekly chart. You can even notice that on the big pullback here, you had heavy volume here, but notice how it closes up off the lows. I'm not sure. Let's see, is that the required amount off the low for a supporting week? Let's see. I don't think so. 35.58% is what I'm getting. So it's not enough for a supporting week. That needs to be what was the old rule, 41% or something like that? Anyways. Let's see. I'm going to just rip through some of the things I've been looking at. Facebook, and this big ugly, call it a cup with handle, trying to come out. You get a shakeout and a breakout, and then you get a little pocket pivot type move here, but it's coming off a V-shaped position. Although interesting, and I think I guess you'd watch that in LinkedIn to see if they're building bases that they can come out of. Facebook is trying to come out of its base right now. Let's see. This stock, Fortune Brands, kind of blah, but you did have a breakout here, but no volume, and not a pocket pivot. So you see that kind of stuff. Let's see. Expedia, nice breakout. What are the earnings on this stock, Dr. K? They're not all that impressive, are they?
I haven't been all that impressed.
Last quarter up 3%. You know, it's like, so how can you buy this even though it keeps going up? How can you buy something like this? I
You
can't.
avoid it.
Yeah, and then, you know, I also noticed Visa's going up, you know, the other day, and here's what it's looking like. But it's the same thing. It's like 10% growth. I think MA is the same thing. So they're just piling into these big cap stocks and hanging out, but they're not the type of stuff that we would look for, you know, for something that's going to double or triple for us and has that sort of big stock, big leader type thing going for new, you know, it's the classic can slim stock, as it were. So, you know, it's like, eh. And let's see, what else? Oh, Whirlpool. You know, Whirlpool's acted well, but you're going to go buy Whirlpool. What's the earnings growth on that? That actually is 521%. And next quarter, there's a kind of a weird story here. 521% increase in earnings, but sales are down 3%. I don't understand that one either.
No, that's I don't. That looks like the court because I'm showing it's down 23% in earnings.
Really? Okay.
Yeah. And the sales numbers. The sales down 3%. It's come down for a number of quarters.
So you're not going to buy that one, you know. I think I have first call numbers on mine, so you may be looking at O'Neill. I know in their numbers what they do is scrub out one-time items, and it may be that Whirlpool's earnings are all based on some chargebacks or something. I don't know.
That's why you get the big.
Alley looking like garbage today, but you know, really not in terms of the long side of the market. Can't really say, you know, there's a lot of things I just want to come piling into. You know, Triple D acting okay, but it's extended here, and Poly One, a cracker, extended as well. And I guess, you know, if you really like them, you can buy them, but they don't really do anything for me. You know, this a thinner stock would be hard to handle the big position in this. It needs to grow up a little bit, but. You know, the other thing to keep in mind is that you've seen some of the movements in stocks. You know, to me, this is the junk off the bottom thing that drives a lot of the big rally in the indexes. It's like boom, boom. And you look at Priceline as well. You know, just 3 days of madness, boom, 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 and it's gapping up every day. You know, that's the kind of thing that'll kill you if you're short and you don't react quickly to your stops. Even if you're trying to short it coming into the 50-day into the close on Monday, they gap that thing through there in the morning, just cover it, you know, and you could tell pretty much the market had some wind at its back on Wednesday at least, and that looked like it would carry through. But, you know, it shows you how quickly you have to get out of these things. But again, remember, a 620 stock, even up to 650, is a $62 stock going to 65, which is more than I prefer to sit through, but not, you know, not necessarily a killer, but it does show how you get these wild, you know, straight down, straight up movements. And to me, that's more typical of either the 2009 market, which was a junk off the bottom rally, and one of the reasons it threw us for a loop, and we didn't believe it, is that we didn't see any real leaders. Everything was junk off the bottom. But of course, it was a black swan situation, and you know, that's how it turned out. Let's see, Commvault. I like Commvault Systems. I think it's setting up. And again, now I think if this was an ascending base, you have 1 pullback, 2 pullbacks, 3 pullbacks, and each pullback is preceded by a move to a higher high, and then you pull back into the pattern. So once, twice, 3 times, and you're setting up here for a breakout. Now, here's the debate, Dr. K, that I'd like to, you know, put before you is this do you really view this as an ascending base? Can you form an ascending base during a market uptrend, or do you think that this does imply some sort of coiling on the stock's part?
Yeah, you can't form ascending base in an uptrend.
So end of story.
The ascending base is always formed in a sideways or downtrending market. In other words, it's showing so much power. It's the reason O'Neill used to say ascending bases are perhaps the most powerful pattern, because they're generated during weak market environments.
Right. And I think so what you can get away from entirely is even using you know, any of that sort of trying to label a base business, and you just setting that aside and operating on the basis of pocket pivots here and pocket pivots here on a breakout, on a little flag breakout. So, you know, that one I think looks okay. I like this stock, and I think that the data storage theme is pretty strong with racks acting well. I think Akamai is sort of another play on that, and it's trying to act well, but it's a laggard. But still, you know, you're seeing these sorts of stocks. I think you've even seen Seagate trying to come back. You know, although I'm not quite sure why. I think it's old technology. I'm not sure what's driving them. All right, we've got about 23 minutes before we're going to sign off here, so I'm going to run through some questions. Gil, can you cover KKD? It looks pretty good to me. I wish I owned it. I just talked about KKD in the last webinar. Someone's asking what did I talk about. If you remember, I brought it up and talked about donuts as being the salvation for the new Obama economy. Gil, are you holding Apple shorts overnight? I have held a core position in Apple over the last three nights, or 2 nights rather. It would just be Wednesday night and Thursday night. How do you decide to hold a short overnight or not? First is I have a profit in the position. Number 2, I calculate what I think an upside gap might be and how much that's going to cost me based on the size of the position, and I set it that way. So so that's pretty much how I do it. But I generally I won't hold something overnight if I don't have a profit in it intraday. So if it's pushing me during the day, I'll just probably go away and try to reset up, and hopefully it goes higher. So Apple hitting it near the 50-day moving average up here, and it kind of made sense to me. I still think this whole area here, you have a lot of trapped longs in here, and they're going to be inclined to sell into rallies. And I think, again, I've talked about this before, and I notice this happens in big stocks that are loved by everybody, and that tends to be what happens once it gets cheap and it's perceived as cheap. Everybody just piles in such a massive way, and you can see these massive volume spikes off the lows, but none of them have resulted in any really sustained upside. So just people saying, oh, Apple's cheap, it's a great company, it's going higher, okay, and they all pile in, and of course that is going to drive it higher for a brief period of time, and then it rolls over, and it's been weak, but there's a way to handle this, and I've shown you guys the 620 chart that I use to help me with my shorts. It's just a rough guide. It's not a model. It's not a timing model for shorts. It just kind of shows me when is a reasonable time to get in, and then gives me a reference point for when to get out. And it's not perfect either, because sometimes you'll see something like Apple. So watch Apple here. It'll do this. It'll stop you out here, and it'll noodle around, and shortly thereafter it'll just blow right through. So you can come after it, and a lot of times you are going after it just a little bit lower than where I might have covered. I mean, you guys were with me actually when I covered some of it and dropped back down to my core position. Now I'm just watching it here, and I figured it'll set up in here. If it continues to move higher, I may peel off some more. We'll see. Or if it does roll over and I get another sell signal, then I'll just come after it hard into the close. And the advantage of that is what I've noticed just using this, and it's entirely observational. I don't do any real statistical studies and look at 100 different charts or something in terms of how they all act. I just noticed that this kind of works, being a very visual type of person. Like I remember, I am an ex-cartoonist, so I am pretty visual. And when I first learned about O'Neill's system, what really caught me and grabbed me was the whole use of charts, which is a very visual approach to the market, and I really like that. So I just sort of process these things visually. But what you can do here is, a lot of times what I've noticed is, once you get this signal here, so you could have been short even today if you're watching this pre-open, and you short it, and then you come and you cover your position looking to re-short on a break. A lot of times if you do get the break again, what's happening is the market is on another leg down on an intraday basis for a weak close, heading for a weak close. And on that basis, a lot of times it's very useful when you see another sell signal. So you can cover, and hang out if you don't mind giving up a buck or two on either side, but you're really trying to catch, a nice 10 to 15 point downside move, 3% roughly, and just bag it. Anyways, going through some questions. Somebody's saying tax is 15 to 20% for everyone, plus the 3.8% Medicare tax for people over 40. Yeah, right. It just, they're raising tax rates, and they raised the dividend. Did the rate on dividends go up as well?
That was for the capital gains dividends.
Yeah, and that went up too, right?
15 to 20%.
Yeah, so
both.
All right. CF is another one. That's a stop out at the 50-day, but it goes through the 50-day moving average, and you're right up into this area. It could be resistance right up here around the 210 level. So kind of watching that one as well. And without QE, it's a stuff stock. But there was some news the other day that I think is Agrium and somebody else, Potash, had come to some agreement on prices, and it would, or supply, I don't know, something that was going to bring fertilizer prices back up. So I guess that was what caused us to rally along with the market. But notice this hasn't really been spectacular. It's a nice jerk to the upside, but the bottom line is, from here to here is about a 5% move. That's not all that much in the grand scheme of things, and what you're really playing for is a breakdown through the 200-day that takes you down towards, these lows in here. So that's really what you want to get involved in, something like that. So it's really still early, and it could be shortable in here, but I'd kind of watch it, and you can use the the exciting 620 chart here. You can see you're starting to get a little bit of a break, but it's not that decisive. So, and just another thing I don't really like here is you notice the MACD line here. It's sort of flattening out, like it wants to cross to the upside. So for all you know, it could be setting up a buy signal in here on this, but it's still in play. You can see this thing moving around. So just see, how this pans out. And it's possible it could be shortable right up here, but you could come after it using maybe 210 if it was to go, get back above and just cover it, and then maybe come after it again if you saw a more decisive break. But this one's kind of in flux right now. So here we go, the UVXY, Dr. K. This one's for you. Can you discuss the UVXT? No, UVXY, make that. Can you discuss this?
Yeah, well, the markets went straight up, so UVXY and VXX rather went straight down. That's as to be expected based on the Russian roulette market reaction of December 31st and the first second. So yeah, I mean, in that kind of environment, the UVXY model, because of its volatility, it does not want to be on a buy or a sell signal. It's just going to sit in cash because you don't know which way the market's going to gap.
Right. You know what? I'm watching this CF here, and I think I'm just going to test a little bit here and just see what happens there. So we get it around 209.61. It looks like we filled. So just a little bit. So we'll see how this goes. A real-time trade. Dr. K, do you have any real-time trades to put on right now to wow our audience?
Not right now. I've been watching the my crossbow algorithm, and so far today there's been nothing. It's pretty quiet.
Okay.
Markets are trending higher lightly, and VXX continues to fall.
Yeah, so just keep an eye on this guy. 209.61 we're in on an initial position, 10%, and we'll just see what happens. Someone's asking, how about a macro shift from bonds to stocks? You mean people coming out of bonds, because who wants to own something that's probably going to have to, you're probably going to have to see rates rise eventually, but what do you think of that? A macro shift from, so basically money flows out of bonds and into stocks. We've seen money coming out of stocks for a long time. I'm not quite sure what would drive money back into stocks per se. And why wouldn't money just leave bonds and not go anywhere? Maybe it would go into commodities. Why would it necessarily have to shift from stocks or bonds to stocks and vice versa? Dr. K, can you comment on that?
Yeah, I mean, with this, when people ask, where is the money going to flow, we're going to see it here in the price volume action of major indices. I mean, if that happens and money flows out of bonds into the stocks, great, we'll see it. We don't have to conjecture that that's going to happen before it does.
Right, and that could be a basis for a bull market. But again, we're just kind of letting this play out. So nothing really, nothing in terms of trying to anticipate what might happen. If in fact that's going to happen, then you'll see a broad number of leaders acting well. And so far, what we've seen is a handful of leaders acting well, and we've looked at those stocks, including Krispy Kreme donuts, my favorite. And in fact, I should point out that it is having the biggest move of anything I've seen since Wednesday, if you bought it on Wednesday. So it's probably the only thing you could have bought on Wednesday and be making 10% on, as far as I can tell. Even Amazon with that big jerk to the upside. But, this is kind of what we've seen. This sort of move, and of course, constructive breakouts or gap ups like this, but also spiced in with a lot of, this sort of movement, and like I said, this sort of movement, and of course, even the Apple jerk here. which isn't really sustaining itself. So it's a little bit of a mixed bag, but you'll see it play out, and you can just kind of, if you want to buy a couple of stocks, I guess you can try them out. I should have listened to my own advice and bought a bunch of Krispy Kreme because it's reasonably liquid for a small stock. Somebody says that TC2000 also shows the gap in DDS. So maybe it's Wanda that's wrong. You know what? There's another place I can check. Go to our trusty stockcharts.com. You're not using it right now, are you? No.
No.
And just come up with the daily chart, and I'll just yeah, Apple's trying to trundle back. Still trying to pull it up. But someone says, okay, so we've got one person telling us that TC2000 shows it. You can actually see here that, that this is how it looks on Wanda. So these guys are showing it right. So that is correct. I think this is incorrect. Let's go. ASGN on assignment. That's an old name. It's a play on people using more. Did we mention this as a Bible gap up the other day, Dr. K, on Wednesday? It did gap up and go higher. So does it thrill me?
I don't think did we mention? Let's see here. I don't think this is the.
Probably not. They're doing pretty well though, but it's just generally not something we would normally go after. It looks pretty good on a weekly chart, and you kind of got this big base on base here that you can see, and so that looks pretty cool. But I don't know, you can't buy it now, obviously, but that's worked. So there's one that's broken out, but I'm not going to buy it now. And
it didn't grab me enough. I mean, the numbers look good, but
isn't that always how it is? The ones that don't grab you are the ones that have the big moves. Like Krispy Kreme, you'd sit there and go, what the heck, I'm not going to buy this. And look at it, has a nice move as well. And I kind of think of On Assignment as being the same way. But you do see they could both be turnarounds. And, Krispy Kreme does have some nice turnaround earnings in there. So that looks pretty decent. Okay, let's see. Go into some more questions. WGO, that's Winnebago, is it not? Yeah, there's another one moving higher. That was a gap up a while ago, though. But again, I'm not sure what drives this thing. I guess earnings are turning around, up 550% in the most recent quarter. So that's a little bit of a turnaround, but it's a cheap stock. So again, when I see this, I don't get excited, but it does work. And I think that's just kind of the way of the world these days. Oh, somebody says the DDS gap down is due to a special dividend. MX, not sure what MX is. What is MX? Magnachip Semiconductor. It's one quarter up, 76%. Before that, they were pretty poor. I think I'd watch this for a little bit. I mean, it's kind of interesting, but it's pretty thin as well, I believe. It trades 211,000 shares a day, so it's definitely not something I would ever seek to get involved with myself.
Yep. Microcap.
Yeah. But interesting one. It could be something to keep an eye on. SciTech. There's another one breaking out, So do I get excited about this? I don't know. What is this? Just a chemical company. So stuff stock, we might say. And it's up 3 days, 75% earnings growth in the most recent quarter. They're looking for negative 23% in the next quarter. So, I've been moving higher, but for 3 days, and we'll see what happens. But again, it's not something that I would be inclined to go after, to tell you the truth. So
chart's all wrong too. It just keeps violating the 50-day routinely. So that doesn't.
So it's a little bit funky. So I'm just looking. Notice Apple does get some support at the 10-day. I don't know if this will hold. We'll see how it pans out for the rest of the day. But you can see that I comfortably took partial profit, more than half profits on that, going back to my core position. Now I can just hang out and see what happens intraday. But bouncing around, 531.60 trading at right now. Hi guys, what about Ellie? We talked about Ellie. That again shows just a why it's choppy. But Win Resources, you're coming up from a position like that, you're not going to buy that. Dr. K, why did you recommend TQQQ Tech L U Pro upon the MDM buy signal instead of TNA given the Russell 2000 outperformance?
Well, the buy signal came, first of all, in late December, so that's mainly the reason. I mean, when the buy signal came, you have a Russell 2000 small cap index that is starting to outperform, but there's not clear evidence. And also, if the fiscal cliff issue went to red alert and we did go over the cliff, then small caps would get hit the hardest. So it was better, safer to just recommend something that's a lot more in line with less risk, and therefore TQQQ represents that, whereas something like TNA, which is even more volatile and wild, presents too much risk for that situation, for that point in time, and that crossroads that we were coming to in the marketplace. I can't hear you, Gil.
Oh, Google. Someone's talking about Google, and what happens is when you talk, I turn my mic off so we don't get any feedback with you coming through my speakers, and then I forget to put it on. Okay, so I'm back on. Everybody hears me okay. But anyways, you got a breakout on Google, and the volume is up 30%. I mean, it's trying to break out of a cup with a handle formation. So, you know, is that a buy? Would you buy that there? 62 relative strength. It's not really.
It's not exciting. It's just, and it also just had a bad break in its pattern in October. So, no, I would never be looking at something like this.
Yeah. So, anybody noticing CF coming off now? Starting to break down, so that little test so far is working out. Silica, I don't like this stock. It's too small. It's too volatile. Rather, I'm going to say radical, but too volatile. Tries to break out. It's just not consistent enough. Kind of an ugly pattern, I think, and stalls out a lot. You can see a lot of stalling action in this sort of wide, loopy stuff on the weekly chart. So I tend to think that this. It's either going to need more time to tighten up and act better, but it's just very volatile and not really that reliable. So I'm not interested in it. Please comment on HLF action. Well, you know, HLF, if you shorted on this breakout, you know, you get your 20-25% profit and more, and so you would be covering down there. Now, I actually thought when it got down to, say, 30 to 35, that's where I'd be covering on this short here, and of course you have to be covering. Now it's running it in, but I don't see this as running in. This is more like a dead cat bounce. So if you wanted to come and re-short it, in my view, you should have already covered this if you were short because you got your profit objective. And I know, you know, when it gets down to here and you're still short, you start thinking about how you're going to be up 1,000% in 1 month, and you know you're going to buy an island with the money you make shorting this thing. And of course, it retraces now about half of the downside move. So maybe it's going to get shortable in here again, but you know, I think once you get that, you've gotten the meat of the move, and you got to let this play out. Here's a weekly chart, and just kind of hang out. So, transports are super strong, as are financials. Big growth in the index rally as well. Makes sense. Any other thoughts on this divergence? Financials did act well, and they continue to act well. You know, because I guess the lack of the fiscal cliff is good for them. I don't know. You got any comment? I mean, I like Goldman Sachs. We talked about the pocket pivot here. We put that out. So this is a gap up move yesterday, but not a lot of volume. It acts okay. I mean, that's okay. And then I think you have some other things. You know, Wells Fargo is moving up. Citigroup is moving up. That's breaking out. What are the other ones? Bank of America, of course, is probably moving up. So, you know, maybe they all knew what was going on with all this fiscal cliff noise. Anyways, we're running down towards the end of the hour. Coinstar, I'm going to run through these real quickly. Coinstar short. You have a gap down. I would have shorted it up in here. So the pattern is pretty much a big, ugly head and shoulders. Looks kind of obvious here, but you know, it would have been a short up in here. On this gap, I'd have to break the 50-day now for me to want to short it. I really don't think you have to go too far outside of the stocks that I'm showing you here in terms of short ideas. Someone says, great job on the new book. Thank you for that. You write a book and you have no idea whether it's going to be great or it's going to suck. When we wrote the first one, it was almost like, I wasn't sure. I was almost afraid to see the sales numbers because I thought nobody would like it, but it turned out to be a rousing success. So, when you write them, it's kind of like having a kid, you have it and you just hope everything comes out for the best. URI and Urban. I mean, URI is a gap up, so I don't really see what I have to say, anything that's really to say about that. Urban is another stock. It's a retail stock breaking out. So if you like the breakout here, I guess you can buy it. But to me, it seems like a mundane kind of name. Although I have to admit, my 13-year-old daughter is a huge fan of Urban Outfitters, and the other one is Forever 21. So, and I actually went into a store with her just because I want to see what she's spending. And it's reasonably priced, I think, and a lot of the women in there, I would say, are in their 20s and teenagers as well. So, but it acts okay. What are the earnings like though? 21% earnings growth, 14% sales growth, 96% estimate. That's not too bad. But I don't know. It's just not something around. Yeah, I mean, it's not really a high octane. Not a high octane name that I'm looking for, but it's acting okay. So if you really have to buy something, go ahead. That would that's a breakout. Just use your stop. Someone says, I'm new at the market and would like your help on the selling chart. It's hit a new high today. I'm wondering whether to hold or sell. I don't know. It depends where you own it. Did you buy on the breakout and now you're underwater and now you're getting a V-shaped move and you're wondering whether you should hold or sell? That really depends on what are your objectives for the trade. If you bought it and you weren't stopped out on this pullback, well, you're still in the trade and it's now going to new highs. So why would you suddenly try to second guess the trade and decide to sell it here? Maybe it does break down and go lower, but I can't tell you what it's going to do. So it got support at the 50-day, and now it's breaking to new highs. I don't really think the volume is all that high. It's been a little bit of an erratic stock. The volume is running 14% above average right now for this time of the day, but I can't. Other than that, I don't have any crystal ball that can tell you what you should be doing right now. I mean, if you bought it and you're up on the trade, then unless you're stopped out, you stay with the trade. If that's your objective, if you're out to make 2-point profit, then you would take your profit, I suppose, if you were up on it 2 points. But other than that, it tried to break out. It failed, held the 50-day moving average. You could also say that if this is the breakout point, it did not drop more than 7-8% from that breakout point. So if you were using a 7-8% stop on the breakout, then you're still in the stock and it's still going up. And I guess that's what you would stick to. But trying to anticipate what it's going to do from here or when it's working for you, I would just stay with it, because I don't think you can necessarily say, oh, we're going to go into a big market sell-off and everything's going to break down. I don't think you can say that either. Like I said, I'm playing certain stocks on the short side on a stock-by-stock basis and not so much on what I think the market is or isn't going to do, because I think you're in an index rally, and as far as index rallies go, it's not that bad. Dr. K, how much weight do you give yesterday's Fed move? I give it 0 weight. I just watch the price volume action.
Yeah, exactly.
So, how about Polaris? No, I don't know. Just a big jerk to the upside, no volume. Doesn't really thrill me. CMG, I'm not really going to short this one now. I think it's long in the tooth. So, it's just moving up, but I'm not really interested in this. Got through the 50-day. Next stop would be the 200-day. Do you see Qihoo partnership with Google as a big potential driver for market share? I don't know. Why do we care about this stuff? Go ask an analyst who covers Qihoo. Yes, I think that Qihoo's market share will grow by 23.8% over the next 4 years based on the partnership with Google. I mean, since when does that become part of our analysis? You look at the stock, and I got to tell you, we didn't like the stock down in here on this pullback, but it has moved higher. So what do you go on? If you bought the breakout, depending on what your stop was, you may still be in the stock. Not that it's all that spectacular, and that would be the only basis for evaluating the stock. Whether the Google deal or whatever Google deal or Baidu or whatever it is, or Baidu stinks now, and so Qihoo smells good, or Google's going to partner up with Qihoo and they're going to have baby Googles in China. I don't know. It doesn't matter. You just watch what the stock is doing. So the stock, if you bought the breakout and you were able to sit through it, we didn't like it, and we were wrong, obviously, but we don't have a problem with that because it's not how many times you're right, but how much money you make on the time that you are right. And so if you turned out to be right on this by buying the breakout and then sitting through it, although I think you would have been stopped out because they moved more than 8% below the buy point, I believe, then you're sitting with the stock and it's acting okay, and there's really nothing else to think until you're stopped out based on what your trailing stop is or whatever other stop you're using. So that's really all I would say.
Yeah, trying to catch news events.
Yeah, I just shorted CF.
A news event is really it's a waste of time because everyone knows what's coming. I mean, the news is out there, so everyone can act on it in real time. So the odds of you knowing something beyond what the marketplace knows is pretty infinitesimal. At least that's what I find in years and years of trading. So I don't anticipate news. I just look at the market day to day. Often what will happen though is these stocks will give a clue via price volume action, which will get me into the stock, and then the good news will come out later, maybe days later or weeks later.
Yeah. Well, we gotta wrap up here, Dr. K, because I got a radio interview to do, and we've gone over an hour now. But just some people ask us any short squeeze ideas. Not really part of our method. I don't use the 620 necessarily to go long. LVS, did it have a viable gap up? If it did, it didn't get our attention. So it's kind of low in its pattern. So you can see on the weekly chart, so we're not into it. SCTY, I'm just going to run through these real quick. This is too, I don't know, this is way too short. I'm not going to buy this, so I don't know much about it either. Negative earnings growth. No, I'll pass. Last, soda, because that one's been moving. This one's probably a short squeeze, but this is what you're looking at. It's just in a low pattern here in this weekly chart, so I don't really see this as anything I want to buy. So it would have to set up higher in its pattern. So anyways, I hope this has been somewhat enlightening. We're kind of watching the dust settle here and seeing how this rally holds up. So far on the indexes, it's holding up. It's a little bit choppy and dicey otherwise, but we'll just see how this pans out and where we're at by, say, next week, midweek, and see how this whole thing moves. Any final questions or comments, Dr. K, before we sign off?
No, I think we're good. We're all good here.
All right, you guys. Nice talking to you again, and we'll catch you next week. Take care. Good luck.